Hey guys, how's everyone doing? Welcome to today's webinar. Today we're going to be talking about trade entries. Let's move the chat onto the screen. Oh, and I'll probably move it off the screen for a bit, but just keep it over here so I can see it. So, what are we going to be talking about today? Today, we're going to be talking about how to enter when there is a lot of indecision. So, what do I mean when there's a lot of indecision? Well, when there's more than one indecision candle. Sometimes you'll look at a reversal setup, let's say, sitting on top of a support area, and there's 4 indecision candles. How do you enter in this case? Well, we'll talk about that today. How to enter when price is messy in general. So this is when it's not necessarily indecision candles that are stuck on support or resistance. It's just messy, moving around on support resistance. How to enter in that case. We're going to be talking about that because I see a lot of people in the forum making a lot of mistakes with their entries. So I want to talk about those things. We're going to talk about the difference between optimal and minimum entries, because there is a big difference between optimal and minimum entries, whatever you want to call them. So we're going to talk a bit about that. We're going to talk about when retrace entries make sense and how to use them. That's not going to be very long because retrace entries are actually quite simple. We're going to talk about entering compression trades, which also is not going to take very long because they're quite simple. I don't have a period after entering compression trades, but I have a period after all the rest of these ones. So that's kind of silly. But anyway, let's get started. So, messy or too much indecision? I just realized the way I phrase that makes it sound like I'm saying, is it either messy or too much indecision? But what I mean is both of these. So if it's messy or if there's too much indecision, how do you select an entry? How do you get a good entry? Well, first of all, with all our entries, we want to enter when a barrier is broken. So what do I mean by a barrier? I mean, we want to enter a short trade when we've confirmed that sellers have taken control of price. We want to enter a long trade when we've confirmed that buyers have taken control of price. How do you confirm that buyers or sellers have taken control of price? The easiest way is to wait for a barrier to break. So the barrier can be a high or a low, a support resistance area, a psychological level, but mostly we're looking at highs and lows. The further the high and low is away, the bigger the confirmation. The closer, and I'll show you this on a chart, what I mean, the weaker the confirmation. Now, the thing is, barriers can be created by any candle. They don't need to be the indecision candle. You don't have to always use the indecision candles high and low. You can use candles that came before the indecision candle. You can use candles that came after the indecision candle. Again, I'm going to show you this on the chart so it makes a bit more sense. So the key really is to look for the highest high or the lowest low. It doesn't have to be the indecision candle's high or the indecision's candle low. You have to look for the highest high or the highest low, especially when price is messy. And also, sometimes it just helps to switch to a larger time frame, but I'll give you an example of when that makes sense in a second. Oh, where are my charts? It was supposed to be behind here. Okay, one sec. Well, there are my charts. So, let's take a look at the charts and I'll explain what all these things mean. all these things I've talked about here by showing you a few examples. Of some trade setups that we've looked at recently or over the past few months, because I haven't been trading that much until this week, because as most of you guys know, I took 6 weeks off, so I kind of struggled finding good examples because I couldn't really look at my past trades. I found it hard finding good examples in the last month or two, so I had to go back a bit further. So we're going to take a look at a few examples, and actually let's start with USD CAD. I had a good example of a really messy setup here that I wanted to show you. Oops. That I wanted to show you guys. Yeah, okay, so here it is. So, where am I? Sorry, I have got, like, everything is just in the way at the moment, not in its right place at the moment for some reason, so it's hard to get these examples rolling. I didn't have my drawing tools, but now I do, so we can get started. I'm gonna kick things off with this one here. So, remember how I just said, one of the things you do when you see that price is really messy is switch to higher time frames to look for your entry. That is pretty much one of the key things that I always do when I'm looking at a potential setup. So price stalling on an area of support resistance, and let's imagine we were looking at around about the 28th of December, which I know most of us weren't trading, but just for the sake of an example, let's say we were looking at USD CAD on the 28th of December. Now, on the 28th or the 27th of December, it formed this nice little indecision candle. Now, you might have said to yourself, well, that's a pretty decent short opportunity. Let's set up a short trade here. So you would put up your entry roughly here, wherever. Just for sake of example, let's say this is how you've set up the trade. Now, it doesn't actually move down and hit your entry. It just starts moving sideways on top of the support resistance area. So we get not necessarily indecision candles here, although they do kind of indicate indecision, but they're just messy back and forth candles. It's indecision, it's mess, it's kind of the same thing, really. Price is moving sideways on top of this support resistance area. So what do you do in a case like this? Well, there's a few things you can do. Number one is you could switch up to the daily. Now, switching up to the daily is going to condense the candles. I know this is pretty obvious, but I'm gonna state it anyway. Don't get too wrapped up in the time frame on which you started looking at the trade. If you started looking at it on the 12-hour because of this indecision candle, and then it starts moving sideways, don't get wrapped up in trading this on the 12-hour. It doesn't matter what time frame you trade it on. All you have to do is switch up to a higher time frame. It's going to condense those candles, and then this setup looks a lot clearer, doesn't it? It condenses the candles. Now you've got a much clearer setup. You could possibly put an entry there, stop loss there, and then you have a huge target. Now, does this entry and does this stop loss look good to you guys? Let's put the stop loss up there. I actually expect you guys to respond and tell me if it looks good. This is not just a rhetorical question. Does this stop loss and target look good? Janine says yes. Jan says Giovanni. Giovanni is actually the only one so far that's correct, but we'll get more into that later. Why Giovanni is correct. I just wanted to kind of feel out the room and see what you guys were thinking, because yeah, this is in fact not an optimal target and stop loss and entry, in fact. But anyway, so one of the things you could do when things are messy is switch to the daily or switch to a higher time frame. If you're on the 4 hour, go to the 8 hour. If you're on the 8 hour, go to the 12 hour, the daily, whatever. Now, sometimes you can't go up a time frame. Let's imagine what was happening here. Instead of happening on the 12 hour, as we see here, this was actually the daily chart. Now, this happens on the daily chart. I mean, it's not as common, but it can happen. If this was the daily chart, you can't really go up a time frame. I mean, I guess you could technically go to the weekly, but the weekly is condensing things a lot. The weekly is condensing 5 daily candles into one. The 12 hour is just condensing 2 12-hour candles into a day. So you're condensing stuff too much on the weekly, and the weekly is a lot tougher to trade. You need pretty huge stop losses. So sometimes it's just not viable to go up a time frame because there is no viable time frame to go up to. But you still want to take the trade. Can we take a trade like this? Yeah, you can. You could definitely take a trade like this. What you have to do is you have to pick, like I said when I had the slide up, you have to look for the highest high or the lowest low for your entry. Now, where is the lowest low? There are 2 lowest lows here. When we look back a little bit, there are 2 points at which price kind of formed a low that was hit a few times. The first one's here. We could see that that low was hit several times, so it formed a nice little low there. Now, once that low is broken, what happens? What is this? This is a barrier, isn't it? That low there is a barrier. And once that barrier is broken, that confirms that sellers are in control of price. Therefore, our trade is viable and we can get in. Now, there's also another one that's a little bit higher up, and it would be the low of this indecision candle here, because that's the lowest low other than these ones here. Now, we could use that one too if we wanted to. Place our entry a little bit beyond the low. We can see it's not as effective because we can see it spiked down, came back up, spiked down, came back, so on and so forth. So this one's not as effective. And that's because when you're looking at a short trade, the lower your entry, the more effective of a confirmation it is that sellers have taken control of price. Now, let's imagine we want to enter this trade here. This is the daily chart. Again, it's the 12-hour chart, but we're pretending it's a daily chart just for sake of example. Let's say we want to enter short here. If our entry is all the way down here, so, you know, this red area is the stop loss. So if our entry is all the way down here, at this point, that's pretty good confirmation that sellers are in control of price. I mean, by the time it gets down there, we can comfortably say, yeah, it looks like sellers are in control. Obviously, this is not a viable entry because, you know, our stop loss would be gigantic and we wouldn't have much opportunity for a decent target. So that's not a viable entry. But what I'm just trying to do is illustrate the point that the further away it is from the resistance area, the stronger a signal it is that sellers are in control of price. So on a large scale, that's true, but also on the smaller scale, if our entry was below the low of this indecision candle here, which is one of the lowest lows, right? If it's below the low of that indecision candle, our stop loss is up here. That's a viable or acceptable entry, let's say. It's an acceptable entry. But if it was down here, that's an even better entry. Now, why is that a better entry? Well, first of all, it's further away from the resistance area, so it's more of a confirmation that sellers have taken control of price. And actually, there is no second of all. I don't know why I said first of all. There's no second of all. That's the reason. There's only one major reason. It's further away. Now, there's obviously a little bit of a balancing act here, because we can look at all these lows here. We could look at the low of this candle and say that that's a significant low. And if we were to enter below there, let's put a line here, below here, that would be even extra confirmation. And that is true, of course, but again, that's going to make this trade not viable, because that entry is too far away. So there is a bit of a balancing act always. It's finding a good entry that's going to give you a good enough risk to reward ratio, but that is a confirmation that sellers have taken control of price. So the optimal entry, in my opinion, for this trade would actually be around about here, but below the low of these candles. The stop loss, optimal stop loss, would probably be, you know, somewhere up here. And with that entry and that stop loss, pretty wide stop loss, nice stop loss, we've got a risk to reward ratio of 2, which is a lot. Good risk to reward ratio. Now, going back up to the daily. On the daily, we could have done things a little bit differently, but we could have also done things the same. On the daily, we had kind of 2 points here that we could have picked, 3 points that we could have picked for entries. We could have picked the low of that indecision candle. Could have picked the low of this indecision candle, or we could have picked these lows here. We have 3 potential entries. Now, all of them are technically okay, and it depends on you and your risk appetite, which one you want to pick. And a lot of the times, the question simply comes down to what's going to give me a good enough risk to reward ratio. Because sometimes this support area is not going to be that far away. Sometimes this support area is going to be up here. And then having an entry all the way down here is going to give you a horrible risk to reward ratio. So you need to have that higher entry in order to get a good risk to reward ratio. So sometimes it just comes down to risk reward ratio, and it's that simple. But when you have a lot of room to the next support area, you should always look to extend your entry out further. That way you have more confirmation that sellers are in control of price. So I actually have another example. I have a lot of examples, but let me find this one, because it actually illustrates pretty well what I'm talking about here. This is especially true on the lower time frames, by the way, guys. It was yeah, GBP, JPY, 8 hour. No, that wasn't it. Sorry, guys. I know it seems a bit disorganized, but it's really hard having examples like this ready, because you kind of have to memorize what they all are. I wrote down some notes, but this isn't. And I put the marker here, but I don't think this is what I was looking for. Right. Let's just skip to New Zealand USD daily. I think I know what's happening here. I think I closed my charting platform before it auto-saved, so these blue lines are in the wrong spot. I think that's the problem, which is kind of unfortunate. It's just going to take me a little longer to find the examples. I'm sorry about that, guys. Yeah, let's just go with New Zealand USD, because that one's going to be a bit easier to find. All right, here we go. So New Zealand USD. Another example that was around Christmas time, but it doesn't really matter when it was because, this sort of price action is going to form even outside of Christmas. So it doesn't really matter when it was. Now, here we have a indecision candle on top of a support area on New Zealand USD. So when you're looking at this, you could say, I want to go long. Now, a lot of people, that I've noticed on the forum, a lot of people, when they're looking at a trade, what they'll do is they'll set their minimum possible entry, which is a few pips above the high of the indecision candle. So a few pips above the high of the indecision candle, and that's their entry. Then their stop loss is super tight too. It's a few pips below the low of the indecision candle, and their target goes somewhere like there. And that's the trade setup. Now, if you look closely, with this example here, you would have been triggered into the trade, and then it would have failed. And this happens quite often. I've seen this on the forum a lot, where people use the minimum possible entry, and they get into a trade, and boom, it fails because they use the minimum entry. Now, if you just extend your entry out a little bit, because you have a bit of room to breathe with this trade. You have a bit of room. The next resistance area is up here. You can maintain a pretty decent risk to reward ratio and have that entry extended out a little bit. You could extend out your stop loss a tad, and you could still get a pretty good risk to reward ratio. Why not do that? There's no reason to have your entry as tight as possible just so you can get a bigger risk to reward ratio. Because all that's going to happen is you're going to get triggered into trades that you shouldn't really be in. Because with this one here in particular, is that a confirmation that buyers have taken control of price? I mean, it's a little bit of a confirmation. It's suggesting that buyers are making new highs. Well, it's not suggesting buyers are making new highs, which is suggesting that they're gaining control of price. But it's not like they've gained firm control of price at that point. So entering there is like, it's okay. You can do it if you want. But it kind of is a bit risky. And now, this happened just a little bit later too. A few candles later, we got the same scenario. Now, if you weren't around for that one and you were trading this one instead, could have done the exact same thing. You could have looked, and this one's an even better example because it's even further away from the resistance area. So, you set your entry a few pips above the high of the indecision candle, set your stop loss down here, and boom, failed trade. I see this on the forum a lot. People just entering way too soon when they have a bunch of room. I mean, look at this one. You have a risk to reward ratio of 3.43. That's a crazy good risk to reward ratio. When you have a risk to reward ratio like that, you can afford to put your entry a little bit later. You can afford to extend out that stop loss. And you're still going to have a good risk to reward ratio. You can even put your entry up here and your stop loss down here, and you still have a good risk to reward ratio. And why not? Why not extend that entry out? Because once that entry is extended out, that's further confirmation that buyers have taken control of price. That first 3 pips beyond the high of the indecision candle, that is kind of a little bit of confirmation, but it's pretty weak confirmation. If buyers are able to push up this far beyond the indecision candle, that's even more confirmation. And the further away, the more confirmation. If they're able to push up this high, that's obviously an extreme example again, but that's even more confirmation that they've taken control of price. So when you're looking at entries, you need to always be thinking, I want buyers to confirm that they've taken control of price. And while using the minimum possible entry is okay in some cases, most times you shouldn't really do it that way. So maybe with this example here, I'm not sure about this because this isn't one of my prepared examples, but so our minimum risk to reward ratio is 1.5. That's, I prefer trades with 2, but 1.5 is acceptable. So this one has a risk to reward ratio of 1.5 at the next support area. If your entry is like 2 pips below the high of the low of the indecision candle, and if your stop is 2 pips above. Now, if you really, really want to enter this trade because you think this trade has a hugely high chance of success, you can use that minimum entry and you could use that minimum stop loss. You can do that if you really want to. But the thing to always remember is minimum is not a goal. Minimum is not optimal. Minimum is what you use when you want to get into a trade, but the indecision candle's huge or the next support area is close by, and the only option you have is to use your minimum entry, which is a few pips below the low of indecision, and the minimum stop loss a few pips above the high. But minimum should never be your goal. Your goal should be safe, because safe is optimal. So when you have a lot of room to move, always go for the safer option and extend out that entry. How far do you extend it out? As far out as you can while maintaining a good risk to reward ratio. Giovanni was right on the money when I asked about the example. What was that? Was that USD CAD, I think? It was that big USD CAD move. Giovanni was right on the money. I said, would this be an optimal entry? It was something like this. I don't remember exactly what it was. But I said, would that be an optimal entry and stop loss? And most of you guys said yes. Some of you said you'd extend the stop loss out a bit, which is good. But Giovanni was the first one to say it, and he was right on the money with that. Extend out the entry, extend out the stop loss. I mean, you have so much room with this one, so much room. You can set your entry, as we saw, all the way down here, have a good stop loss, and still have a good risk to reward ratio. And that's going to make this trade a whole lot safer. And yeah, of course, if it works out, then you're going to make less than you would have had you entered here. That's true. But the losses that you avoid by extending out that entry are going to more than cover the little bit of the little bit of profit loss by entering a little bit later. You're going to take way less losses if you do that, because you're extending out that entry and you're not getting into trades that are not really that good. Does that make sense so far? Do you guys get what I'm talking about? Now, here's another example of a pretty messy setup that you could, in theory, have traded if you wanted to. Now, it's in no way an ideal setup, but you can trade this setup too. Now, when you first looked at this setup, you might have seen that indecision candle and you might have set an entry and it wouldn't have worked out, whatever. But let's go beyond that. And what do we have here when we look at this setup? What do we have? We have price stalling on a resistance area for an extended period of time on the daily chart. Now, we can't go up to a bigger time frame to kind of condense this. Like I said earlier, we can technically, actually, we need to put a line there to mark it out. And let's see what it looks like on the daily, on the weekly. Is that it? Yeah. See, this is what it looks like on the weekly. And that's because the weekly condenses stuff too much. So it's not going to look that good on the weekly. You could maybe go up to a 2-day or a 4-day, but those custom timeframes are a little bit tricky to trade, and they usually have a few issues, especially on TradingView. One of these candles is usually going to be a... I'm not 100% sure if they still do it like this, but I think they do. You can't have 3 2-day candles in a week because there's only 5 trading days in the week. Well, 5.5, but there's 5 trading days in the week. So you're going to have a 2-day, a 2-day, and a 1-day. If you go to the 3-day charts, you're going to have a 3-day and then maybe a 2-day. I don't know. I don't know what the next candle is going to be. So, actually, that's a good point. How would 3 days work? So you have one 3-day candle that starts on the 13th and ends on the 16th. Then you have the 16th and 17th. That would be a 2-day candle. So see, you're not looking at consistent candles is what I'm trying to say. If you're on the 3-day, you're looking at a 3-day, a 2-day. If you're on the 2-day, you're looking at a 2-day, a 2-day, a 1-day. So, you know, the candles aren't consistent, which is a bit tricky and makes it a little bit hard to trade. You could, of course, go up to those timeframes if you want to. I personally don't really like trading them. But we could see in this example, if we go to the 3-day, then we get a pretty solid indecision candle. You can do that if you want. It's okay, but do keep in mind that you aren't looking at 3-day candles. Not all of these candles are 3 days. It's a 3-day, a 2-day, a 3-day, a 2-day, so on and so forth. So that could definitely throw your analysis off, especially if you're not aware of it. You can do that, but you could also just trade it on the daily. It's just going to be a little bit trickier to trade it on the daily, but it can be done because all you're really doing is kind of condensing these candles in your head. And condensing candles kind of isn't really that hard. Because all a candle is a high, a low, an open, and a close. So if you condense all these candles into one, then what you end up is... Anyway, look, sorry, I'm kind of getting off track. That's not that important. Condensing the candle in your mind is not important. That's not what we're here to discuss. And there's a tool in the course for that. Oh yeah, there you go. Giovanni is like on the ball tonight. I was just about to say, there's a hidden price action tool. It's in the course tool section or somewhere that kind of condenses candles for you. I'll get you guys a link to that, but that's not important right now. The hidden price action tool condensing candles is not important. What I want to talk about is how to enter a trade like this if you want to enter it, but because one of the objects of this webinar is to talk about entering messy setups. So how to enter one of the objectives, not objects. I don't know what I'm talking about. Is to talk about how to enter a messy setup. So this is a messy setup. So it actually kind of becomes pretty simple. You do that. Now I know I've just been going on and saying the minimum is not optimal. You don't want to use the minimum if you don't have to. But in this case, you kind of have to. Because to get that risk-to-reward ratio of 2, which is always the best, 1.5 is acceptable, but 2 is always better. To get that risk-to-reward ratio of 2, we need to use our minimum entry and our minimum stop loss. So in this case, we would do that. But what are we doing here in order to get our minimum entry, our minimum stop loss? All we're doing is we're looking at the most recent high in this group of candles that are moving sideways on the support resistance area. We're looking at the most recent high, which is this candle here. We're putting our stop a few pips above that. We're looking at our most recent low, which is this candle here, and we're putting our entry a few pips below that. Now, this is the same effect as going up to, I believe anyway, unless that 3-day candle's a bit weird. But no, see, this is the same effect as going up to the free day and placing an entry at the low of that indecision and at the high of that indecision, or the high that came after it. But same effect by going up to the free day, but you could just do it on the daily if you want to. So we can still enter this trade. We just need to use the lowest low in this group of candles and the highest high as our points for our entry and our stop loss. So the reason I'm pointing this out is because even though we're looking at examples here on the daily chart, this is exactly how we do compression chart entries on our compression charts, or sorry, lower time frames compression setups. This is how we do entries, because compression setups, they tend to be a whole lot messier than the daily charts. So you're going to have situations like this happening a whole lot more often on the 15-minute chart or on the 1 hour chart. It's a whole lot more common on the 1 hour chart. So you're going to have to use these types of entries to trade compressions a lot more often than you do on normal daily charts. But compression chart trading for entries and stop losses is exactly the same as our higher time frames. When you can, you extend out that target, you extend out that stop loss. When you can't, you can use the minimum if you really want to. A lot of the times things are going to get messy, price is going to be moving sideways on an area of support resistance. And in that case, we do what I'm showing you here. We select the lowest point, the highest point, and that's where our target and stop go. Just looking. Excuse me, guys. For those of you who don't know, I've said this 100 times, but there's always someone who, wasn't in other webinars. I got bronchitis over the New Year, just before the New Year. So I spent my New Year in bed. So I've still got like the echoes of a cough. The bronchitis is gone, but the cough's still there. So I might cough a little bit here and there. It's mostly gone though, so I don't know if it'll happen again. But yeah, where was I? Example-wise. I can't remember, but anyway. I was actually looking at EuroCAD. Oh, well, this has changed a bit since I was looking at it. It dropped down a little bit. So it's not really valid anymore. It's not really a valid example anymore. Well, actually, no, it kind of is. It's still a valid example. But if you look on the 12-hour, what EuroCAD's been doing is it's been moving sideways on an area of support. And to be fair, it's been pretty difficult to enter this one. Now, I know you could say that technically this was an entry, and yeah, maybe some people entered there, but as I've been saying all week, it's risky to enter Euro this week because of the Brexit stuff. So again, we've got sideways movement here on top of support. You're on the 12-hour. What's the best solution? Jump up a time frame. That's going to condense things, and things are going to look a little bit clearer, a little bit better, and you might be able to catch a trade there. And now what's happening is we're getting what looks like a pretty decent indecision candle here on the daily. This Friday candle here looks pretty good. Next week, this might end up being a decent trade. Hopefully next week there's less Brexit stuff going on, and we might be able to jump into a trade here. It looks like a decent indecision candle at the moment. Now, if you keep your mindset stuck on the 12-hour, it's going to look messy. But pop up to the daily, boom, looks a lot better. So your options are always go up a time frame, and then if you can't go up a time frame because you're on the daily already, it's do what I showed you with USD CAD, where you got a bunch of messy movement, but you have to set your entry at the low, below the lowest low and above the highest high. That's how you deal with messy setups. It's really not that difficult. And you know, the other thing that you have to always remember is when you can, you want to extend out your target, extend out your stop loss and your entry. When you have the breathing room to do so, you should do that, because that is going to be a much safer entry and it's going to save you from getting into a lot of bad trades. Any questions so far? Ooh, that's a good question, Giovanni. If it comes down to a choice, everything else is equal. Should we favor extending our stop or extending our entry? I usually just do a bit of both if I can manage it. If I can't manage it, I'll usually extend my stop loss because I prefer that extra protection. I haven't yet tested, I haven't yet ran through the data to figure out which would be better out of the two. I feel that probably extending your stop loss is a better move if you only really have enough room to extend one. I feel that extending your stop loss is a better move. But it's possible that extending your entry is better. I just don't really have the data. It's a bit of a tedious job to collect the data and then analyze it for this kind of thing. Because you're going to have to record, you know, in your trading journal, you're going to have to record the actual entry you took and then what the different entry would have been and what the different stop loss would have been. And then you have to compare all of that information, you know, after 50 or 100 trades to see what's optimal. And then, you know, your first set of 50 or 100 trades is probably not enough. So you're going to have to do that again and again. And, you know, it's a huge job. So I haven't really done it yet. But personally, I favor extending my stop loss over my entry if I can only choose one. More safety over more confirmation. More safety is, yeah, generally speaking, better. Any other questions so far, guys? I'm just gonna wait a little bit in case there's questions because some people are a bit slow to type. Doesn't look like there's any questions, so let's move on and talk a little bit about compression setups. Just trying to think. Let's do it like that. I don't want to remove that area of support resistance, but at the same time, I don't want it to be in the way, so I just made it a bit invisible there. So here we have a pretty decent compression or range, let's call it, formed on USD JPY on the 15-minute chart not too long ago. So that's the range formed. It's got 2 bounces from the bottom, 2 bounces from the top. You can start trading it at that point. Now, you're going to find when you're trading lower time frames, the lower you go, the messier things are going to get. And the more difficult it's going to become to enter trades. Now, when you're trading compressions, you're going to have to use the method I was showing you with the USD CAD daily example a whole lot more often to enter your trades. You're going to have to be a bit more creative with your entries and your stop losses. And beyond that, you're going to have to extend your entries and your stop losses way more often. Because the lower you go in time frame, the more susceptible you are to getting stopped out by spikes. On the daily, if you have your stop loss somewhere like here, let's imagine this is a daily chart. It's going to be quite hard for price to spike from here to here and stop you out randomly. Because that's, 30, 40 pips, whatever it is. But on the 15-minute chart, this is 6 pips. Now, it's super easy for just some random minor news report to come out and spike price 6 pips, 7 pips, 8 pips, 10 pips. It's really, really easy. When you go to Forex Factory, I filter out all the yellow reports because they're not really that important, and all the orange reports. But if you filter them in, you can see how many reports there are. Now, these reports, trading the 8-hour, trading the 4-hour, trading the daily, they mean nothing to us. The biggest spike they're going to cause is going to be like a few pips. So I don't care about them. Sometimes the orange ones, if they're way off consensus, they can cause, a 20, 30 pip move that might affect you on the daily, but it's such a rare occurrence that it doesn't really matter and it's not worth worrying over. But all these yellow reports, well, most of them, I'm not going to say all of them, they have potential to spike price a few pips. And you can't possibly not trade during those periods because, as you saw, wait, let me bring them back up. As you saw, there is a lot of them. They're happening pretty much all day. You can't avoid trading whenever there's a yellow report coming out. So when you're trading compressions, it's really, really important to do what I was saying and extend out your entry and extend out your stop loss. Super important. It's one of the most important things. So what the hell's happening with my charts? So let's say we want to enter a compression here. We got this resistance area here. Price comes up for the 3rd time. We get indecision forming there. We get not indecision forming there. Just kind of like a bullish candle. This one's quite tough in terms of where do I enter? There's no clear indecision, and this is going to happen quite often, especially on the 15-minute chart. It's just going to be messy and it's going to be tough to enter. So how do you trade something like this? First of all, you pick a somewhat significant low, the most significant low you could find, because we're going short, we're looking for a significant low. Probably the low of the indecision candle in this case. So I start off by placing this tool, this TradingView tool here, at that low. Then I look for a significant high, which you could say would be the high of the indecision candle. But if we look to the left, it spiked up to here recently. So let's see if we can get it up to there. Yep, we can. So we can get a pretty safe stop loss there. We can get it beyond that high. Can we extend that entry down? Yeah, maybe a little. We can pull that entry down a little bit, while still having a stop loss above that high and maintaining a risk to reward ratio of 2.5. Now, this is a whole lot safer if we do it like this than setting your entry here and your stop loss here and going for the minimum, especially on the 15-minute chart, where, as I said, some random crappy news release that is not even worth thinking about can spike price 3 pips and take you out of a trade. You don't want to have a stop loss that tight on the 15-minute charts if you can avoid it. And in most cases, you can avoid it. In most cases, with compressions especially, you can have a pretty wide stop loss and a pretty wide entry. You're going to have a smaller risk to reward ratio overall, but I'd rather have a smaller risk to reward ratio and less failed trades, personally. And statistically, having a smaller risk to reward ratio and less failed trades is going to, well, for me personally, I've ran the data, is way more profitable to have less losses. Because a loss is going to take you out for 1R. So 1R is, whatever percentage of your account that would be, whatever percentage you've risked, where on the target, you're not losing nearly that much. And you're going to be taking a lot more losses. Anyway, when it comes to compression chart trading, safer is almost always better. If you're looking at a trade that has very tight entry and stop loss, it's almost better just not to enter the trade. Just to skip the trade entirely. I think I've covered everything I really wanted to cover today. Are there any questions about about this? About the 15-minute charts that you guys want me to go over? Because I get a sense that a lot of people are intimidated trading compressions, not even just the 15-minute, even on the 1 hour. A lot of people are intimidated trading compressions, but you really shouldn't be. They are extremely effective. They are a little bit harder to enter most of the times, but sometimes not. I mean, sometimes they just give us a nice normal indecision candle on top of an area of support, like here. That would have been a long trade there on USD JPY. Could have had a pretty wide entry there, pretty wide stop. Even wider entry, really. Still maintain a good risk to reward ratio. That would have been an easy one. They certainly require more chart time. If you don't want to spend more time looking at your charts, then compressions are definitely not for you. Yeah, no, I get what you mean with that, man. Waiting for two bounces uh, makes it seem like the range is about to end, and you do have a point there. Most ranges end pretty quickly after two bounces to either side, but I have found through my testing that not waiting for those bounces means that you lose more because there's a lot of cases where you would enter a trade when it's not really in a range. It just kind of happened to sort of bounce close together. But the two bounces actually confirms the range. Yeah, they don't seem to last more than a few bounces. But doesn't really matter. I mean, as long as you get one or two good trades out of them. I don't see many of them posted to the forum, but there are a lot of them happening. I just feel that it's a little bit harder to easily share these than it is to share a trade that's happening on the daily chart, for example. If a trade's happening on the daily chart, you know, you could be at work, for example, for someone who has a full-time job. You could see it forming. You could come home 6 hours later and you could post it to the forum and nothing much has changed. But if it's a 15-minute chart trade, you notice it when you're busy. You know, it could be completely over 3 hours later when you have time to post it to the forum, which is why I think there's a whole lot less of them posted, but they are constantly happening if you keep an eye out for them. I think a better format for sharing these kinds of trades would probably be a chat room, but I'm just not sure if a chat room's a good idea because I think it's going to take away take away from posting on the forum. Do I journal all compressions or scalping trades? Of course. I journal every single trade I take. Even demo trades. I still do demo trades for testing. I journal demo trades, man. You have to be obsessive with your journaling if you want to be a successful trader. If not, you're just wasting your time. You're not going to learn from your mistakes ever if you don't have a trading journal. Well, I won't say ever. You might learn from your mistakes, but it's going to take you 1,000 trades to identify the mistake instead of maybe 100 trades. BTC USD, it might work. Let's take a quick look at it. But I'd be I'm not 100% sure on the profitability due to spreads. And for the ones that you're holding for a little while, overnight fees. I don't know what spreads are on most brokers. Let's take a quick look if we can find that data. Where's that? All right, here, I got it. My FX book has this cool little spread tool, but I don't think they would have VTC USD. No, they don't. Paul, I haven't entered the trade at that point yet. So I don't reduce the size. I do those calculations after I've decided where my stop loss is going to go. And my stop loss is always going to be a specific percentage, the percentage I've decided to risk on that trade. So the value would definitely change depending on the size of the stop loss. Who has BTC with their broker? BTC USD. Trying to find. My broker's stop loss is around 40 pips. I'm trying to find other brokers. Yeah. Anyway, regardless, let's just. My point is, I'm not 100% sure if trading the small time frames would be viable on BTC USD. Trading these kinds of compression trades would be viable on BTC USD simply because of the size of the spread. I think the spread being that big would hugely impact your profitability. It's still hard to get decent spreads on BTC USD, unfortunately. Yeah, so you need a pretty big move to cover a 40 pip spread. Yeah, it's not really viable. But there are other options, of course. You're not always paying spread. There's futures options, but then you're trading with an unregulated crypto broker, which is a bit risky too. And yeah, I'm not convinced that it would be a good idea to do that, man. Any other questions, guys? Why isn't it? I hate when it does that. Right, daily. No. Now you're working. Nice. So much sideways movement on BTC USD. It just doesn't move. I don't like sharing my results on backtesting compression setups because I'm not convinced that they are accurate. I've got an over 70% success rate which the reason I don't like sharing that is because I think it would give a lot of people a false idea of how profitable they are. I don't fully understand why I've got a 70% success rate backtesting. I do not believe that it is an accurate success rate. I think there's something weird going on. I just don't know what. It just doesn't make sense. Trading lower time frames like that, you should not have a 70% success rate. It's just not really realistic. If I had that success rate with compressions, I could take $1,000 account and turn it into $100,000 account in a year or two, which it's just not realistic. So I don't really know what's going on there with my back testing. In forward testing, my results have not been as good, but still good. Over 55%. Last I checked, which is still, really good because the risk to reward ratios are quite high, right? The risk to reward ratios we're looking at above 2.5 on most trades. So 55% sounds low, but it's actually really good performance in terms of return. But yeah, that 70% when I did back testing, and I've done extensive back testing. Yeah, I don't want to give anyone false ideas, so I don't think it's just something weird. In backtesting, stuff like this happens sometimes. You'll just get crazy good results in your backtesting, and then you forward test, and you're like, well, that's not like the backtesting was. And the thing is, I'm backtesting on Forex Tester free, so it's as real as it can get in terms of backtesting, and I was getting 70%. So, yeah, just one of those things. Ultimately, the answer to your question is I cannot trust the backtesting results I've got. They just do not make any logical sense to me. Unless I've somehow discovered one of the most groundbreakingly profitable ways to trade Forex ever. Unless that's the case, then I would say the backtesting results are probably inaccurate. It's a lot more likely that the backtesting results are inaccurate. All right, guys, any other questions? It doesn't look like there's any other questions. So, actually. Oh, no. Yeah, it's fine, Janine. When there's not many questions, I just figure that means I've covered everything in enough depth, which I tend to do because I do tend to go on and on and on, that no one actually has any questions left. But I just like to ask several times to make sure. But it looks like everything's been covered. So I don't think... I think we can end this webinar. An hour and 10 minutes, not too bad. I hope you guys learned something useful. I hope you guys have got a bit of insight into entries. Remember, always, minimum is not a goal. The goal is to be safe. So you want to have an optimal entry, which is often going to be a fair bit higher or lower than the indecision candle, not just 2 pips or 3 pips. So yeah, I'll I'll see you guys for Tuesday's webinar. And I'll see you guys probably on the forum before that on Monday. So thank you for attending, and I'll catch you guys later.